It's hard to believe that over a year has passed since the CARES Act was enacted. And as you recall from the CARES Act, PPP loans were approved, and initially, these loans could be forgiven free of income tax, but there was no double dipping allowed. You could not deduct for income tax purposes the expenses that were paid with these PPP loan proceeds. However, that changed at the end of 2020, where the second round of COVID relief allowed this deduction, but this left taxpayers in the lurch who had already filed a return for fiscal year 2020 prior to the date of enactment. So, this would have forced them to amend the return to claim a deduction which did not exist at the time of filing. However, the IRS has since come out with a revenue procedure which sets forth a safe harbor, which allows these expenses to instead be deducted on the 2021 fiscal year return, so long as an election statement is filed and so long as other requirements are satisfied. I'm Griffin Bridgers, and this is 10 Minutes with Griffin. For today's episode, episode 201, we're going to dive into Revenue Procedure 2021-20, which really just covers the deduction of PPP expenses on a 2021 fiscal year return for expenses that were incurred in fiscal year 2020. We'll dive into the qualifications and the finer details, but as always, I want to remind you that this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. And if you'd like a copy of these slides, please email me at griffin.bridgers@gmail.com. PPP loans, when originally approved, could be applied to certain eligible expenses like payroll, mortgage, rent, and utilities for businesses that were affected by COVID and the related shutdowns or contractions in business. So we had these original PPP loans that were part of the CARES Act. And at the end of 2020, as you recall, there was a new act passed that allowed for a second round of PPP loans with expanded expenses. Now, going back for both rounds of PPP loans, originally the intent, which aligned with IRS really policy and procedure for a lot of things, was that the forgiveness would not be taxed as income, but there was no double dipping. Since you were receiving that money free of tax and essentially free from the government, you couldn't then turn around and deduct these expenses that were covered by the tax-free money you received from the government. Now, the IRS was forced to change course with the second round of COVID economic relief aid that was enacted December 27 of 2020. There was a second round of PPP loans approved, and shockingly, this new clause that superseded the previous guidance and now allowed business expenses covered by PPP loans to be deducted, even if those PPP loans were subsequently forgiven. Now, this was a great deal for everybody, but it left taxpayers in a lurch if they had already filed a fiscal year return on or prior to December 27 of 2020. So, in a situation like that where you have a deduction that didn't exist at the time of filing but later is approved and is retroactive, that typically forces you to have to amend a return or request an administrative adjustment, but the IRS recently published Revenue Procedure 2021-20, which creates a procedure for, in essence, carrying over these deductions to the 2021 fiscal year return instead of being forced to go back and amend the 2020 return. Now, this isn't available to everybody. There are some specific qualifications. For one, this relief is only for the original round of PPP loans from the CARES Act that was approved in April of last year. This doesn't apply to the second round of PPP loans, which was approved in late 2020 and largely issued in early 2021. Now, timing is a big element of this. This is only going to apply to taxpayers who actually filed, not had due, but filed a fiscal year 2020 return on or prior to December 27th of 2020, which was the date of enactment of the act that had this deduction approved. Now, on that 2020 return, you have to have filed it without deducting expenses paid from PPP loans. Now, The procedure doesn't necessarily require you to have had forgiveness at the time of filing. It's okay to just have had a mere expectation of forgiveness as long as you didn't deduct the expenses due to anticipated forgiveness on the 2020 return and with respect to those original PPP loans. It's also important to note that the original PPP proceeds had to be applied to the original list of expenses, which was really just payroll, mortgage, rent, utilities. You couldn't use the expanded list of expenses from the second round of PPP loans. So this revenue procedure will disqualify those expenses just from this reporting procedure and not necessarily from deductibility. Now, that being said, if you're qualified, what you can do is simply deduct, like a carryover, the previously non-deductible expenses that were funded with these original PPP loan proceeds on your fiscal year 2021 original tax return with extensions instead of going back and amending the 2020 fiscal year return. So, to do so, you're going to have to file an election statement with your 2021 return. You'll just take the expense or take the deductions like you normally would in the appropriate schedule on the 2021 return or the appropriate part of the income or information return, but this election statement must accompany it. Now, the election statement body itself must have a title at the top that states Revenue Procedure 2021-20 Statement. And if you're e-filing, there's a specific file path name for the attachment, which is RevProc 2021-20.pdf for that e-filed attachment. Now, beyond that title, there's certain information that must be included on the election statement. You have to include the taxpayer's name, address, and social security number or taxpayer ID number, which is pretty common for pretty much any election statement, so that's not anything out of the ordinary. You also need to note that the statement or that the taxpayer is applying the safe harbor that's provided by Section 3.01 of Revenue Procedure 2021-20. You must note the amount and date of disbursement of the original PPP loan. Now, note that this is requesting what it looks like to be the full amount of the PPP loan and not the portion actually applied to expenses deducted in 2020. Now, beyond that, you do get into the weeds from that larger amount, and if you need to, you can contract it down for this list, but you must create a list including descriptions and amounts of the eligible expenses that are being claimed for deduction on the fiscal year 2021 return, which were allocable within the qualifications to the fiscal year 2020 tax year. Now, note that the safe harbor, all it does is simply allow you a carryover of sorts to the 2021 return. It doesn't relieve the IRS of its right to audit the return or conduct an examination or require further substantiation of these expenses or deductions on audit or review, but it does allow in essence a safe harbor to not have to go back and amend the 2020 return, and that's it. So, if you have a taxpayer or a client who's affected by this revenue procedure, hopefully this helps you out and gives you a little bit better guidance in how to streamline that process. And if you need a little bit more information, look to Revenue Procedure 2021-20. I apologize. As always, if you have questions on non-client related matters or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. But thank you for listening to this episode of 10 Minutes with Griffin, and I look forward to seeing you in the next one.